Hi everyone, welcome back to the Web3 Daily Recap. If you're still yawning this morning, you probably missed the biggest move of the week. Last night's market went full-on beast mode. Bitcoin smashed through 120k before cooling off slightly to hover around 118k. This wasn't just a breakout, it was a full-blown short squeeze that flipped the switch for bulls across the board. BTC's on-chain data showed whales trimming positions while institutional wallets took over. Translation: retail panic. Bought the top while the real money reloaded. Classic rotation move. Ethereum followed right behind, jumping above 3,750 for the first time since late last year. With record inflows into spot ETFs and corporate treasuries stacking ETH, the narrative shifting from maybe to must-have. But the star of the day? XRP. That thing smashed its 2018 all-time high and closed above 3.48. That's not just hype, that's regulatory clarity being priced in fast. Meanwhile, Bitcoin dominance is slipping, altcoins are picking up steam, and projects like Solana, Ton, Optimism, and Litecoin are printing green candles like it's 2021 again. Quick caution though, miners and whales are quietly taking profit here. Don't let the excitement make you the exit liquidity. Just because your timeline is full of green doesn't mean you need to ape into every ticker. Stay sharp, don't chase. This isn't your exit pump, it's theirs. So here's the curveball rumor. Has it the UK government is preparing to unload up to $5 billion worth of Bitcoin. Not a typo, $5 billion. These aren't coins they bought, it's crypto seized from cybercrime cases, think Silk Road 2. And now, with budget deficits piling up, the Treasury is reportedly exploring auctions or OTC block deals to cash out. If it happens, this would be the largest government Bitcoin sale since the US. Offloaded the Silk Road stash back in 2014. Markets already flinching, ETFs inflows are slowing, miners are selling, whales are rotating, the last thing bulls want is a government-sized dump hanging overhead. Even whispers of this can trigger liquidations. And yeah, we're already seeing signs. Futures open, interest dropping, whale wallets moving, spot showing early fatigue. But it's not all doom. Some veterans argue this could actually be healthy. A transparent, phased government sale could build confidence, proving that Bitcoin can handle institutional-grade liquidation without chaos. Think of it as stress testing, the asset class. Short-term, volatility. Long-term, legitimacy. Because if governments start treating Bitcoin like gold, seizing it, holding it, selling it, that means it's officially made the leap, from digital toy to sovereign asset. Now zooming in on markets, we've got Bullish, they just filed for IPO. This isn't just another exchange going public. Behind Bullish are names like Thiel, Block, One, BlackRock, and Galaxy. It's big money meets regulatory greenlight. Their numbers? Eye-watering. Over 2.5 trillion in 2024 transaction volume, nearly 800 million in net profit, and more than 24 zero Bitcoin on the books. That puts them top 5 globally in corporate BTC holdings. And they're not hiding the timing, they literally said the IPO filing is synced with the Genius and Clarity legislation wave. Translation: the US just opened the gate, and Bullish wants to be first through. Of course, their S1 is full of cautionary tales, hacks, volatility, regulatory risk, competition, but this isn't just about one company cashing out. This could start a domino effect of crypto companies going public. It's a statement. We're here, we're legit, and we're joining the big leagues. Bullish isn't selling hype, they're selling access to Wall Street, to retail, to legacy money, and the market's paying attention. And speaking of the US government, they're not done. The House of Representatives just passed 3 huge crypto bills in one shot: the Stablecoin Act, the Clarity Act, and an Anti-CBDC bill that tells the Fed, no digital dollar, not now, not ever. Let's start with Clarity, the bill that draws a line in the sand. It says, not all crypto is a security. If your token is decentralized enough, it's no longer under SEC's boot, it goes to the CFTC. For projects like Ethereum, Solana, and Cosmos, that's a game changer. Because let's be real, for the past few years, the SEC has been whack-a-moling the industry. One day it's XRP, next day it's Coinbase. This bill gives the space breathing room real rules, real lanes, real opportunity to scale. And the Anti-CBDC bill? That one's wild. It bans the Fed from creating a digital dollar without explicit congressional approval. Republicans are framing this as a win for privacy and a shot against surveillance state finance. And Circle, loving every minute of it. No digital dollar means USDC, and USDT just became the dollar's proxy on-chain. Bottom line, the rules are changing, and with Congress finally acting, the US might become the regulatory home base for global crypto, if and only if the Senate follows through. Let's shift to ETH for a second because Thiel just made his move, big time. SEC filings revealed Thiel's fund has acquired a 9.1% stake in BitMine, a US-listed company that now holds over 300 ETH. That's nearly $1 billion in ETH. And BitMine isn't just holding it, they're staking it, running validators, and building a financial layer on top. Think MicroStrategy for Ethereum. And that's not all. Thiel's been quietly constructing an Ethereum empire investing in Bullish, a Thiel-backed exchange. Layer 2s like Caldera, derivatives like Avantis, stablecoin plays like Paxos, and RWA protocols. The guy's not just betting on ETH, he's building an ETH-native financial stack. This move isn't about yield farming. It's about turning Ethereum into a programmable, yield-bearing, institutional-grade asset. For Thiel, Bitcoin was the spark. Ethereum is the infrastructure. If this works, BitMine could become the ETF poster child for ETH, the same way MicroStrategy pumped BTC's Wall Street narrative, but instead of just hodling, it's printing real cash flows on-chain. This might be Ethereum's bull cycle to own. Let's bring it closer to home. Binance CEO Richard Teng just made his first public appearance in Taipei, and it's not a low-key stopover. He showed up on stage, met with regulators, and flat out said Binance is ready to build in Taiwan. Why now? Because Taiwan's prepping a formal licensing framework for crypto exchanges. Once that's in place, Binance is lining up to be first through the door. Taiwan has high-quality users, a robust OTC scene, and strong fiat rails. For Binance, this isn't just a new market, it's the last missing piece of its Greater China strategy. But they're being careful. Binance still carries political baggage in the region. That's why this wasn't just a PR stunt, it's strategic soft power. Quiet meetings, public panels, and local outreach. It's not just hello Taiwan, it's we're here to stay. And finally, brace yourself. Chainalysis just confirmed the biggest crypto hack in history. Bybit lost $1.5 billion in a cold wallet exploit earlier this year, and it was North Korea. Again, specifically, the Lazarus Group. And this wasn't a smart contract bug. It was a social engineering masterclass. Insiders compromised, wallets drained, security exposed. That's already over 2/3 of all crypto lost to hacks in 2025, and we're only halfway through the year. Add in personal wallet attacks, which are up to 23% of total stolen volume, and it's clear, this isn't just cybercrime, it's industrial warfare. Even more terrifying, $8.5 billion in stolen funds is still sitting dormant, untouched on-chain. These addresses are landmines, and Lazarus is still laundering. Chainalysis says their average gas fees are 14.5x higher than normal, meaning they're willing to pay anything to vanish the trail. The industry's gotta wake up. If cold wallets can get breached, nothing's sacred. CEX's DeFi wallets, nodes, everyone's a target. And unless security becomes priority number one, this won't be the last Bybit level event we see. That's it for today. The market's roaring, the charts are green, but behind the noise, the real game is in motion. Regulators are rewriting the rules. Institutions are planting their flags. And whales, they're already shifting positions while retail cheers. If you take away one thing from today, it's this. This bull run wasn't built for degen flips. It was built for long game players, for those who read between the filings, the funding, and the FUD. Web3 is no longer a pirate bay. It's becoming a battlefield, legal, global, and very, very real. Time to play smart. See you next round.